This content is brought to you by Link2, which makes private equity investment very easy. Link2 is democratizing the process of being able to invest into tech companies and crypto companies. Previously, this opportunity was only available to venture capitalists, hedge funds, and investment firms. Well, now, if you are an accredited investor, you can get this opportunity before you to be able to invest into crypto companies like Ripple, BitPay, Dapper Labs, Uphold, Abra, and many more. Link2 continues to add these respective companies and their portfolio is growing. So this is a great opportunity to double dip, to be able to hold the crypto tokens such as Ethereum, Algorand, XRP, or whatever it may be, and also invest into the companies that are building the infrastructure of the crypto market. And Link2 was part of the group that invested into Coinbase pre-IPO. And of course, that did really well for them. Well, you have the opportunity to catch the next Coinbase with Link2. So definitely check them out. It's once again the opportunity to double dip, just like the VCs, just like the hedge funds. Check out Link2, link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Gabor Gurbacs, who's the Director of Digital Asset Strategy at VanEck and the founder of PointsVille. Gabor, great to have you back on the show.
Hey, Tony, good to see you. Fun to be around you.
Well, Gabor, I got a lot of questions for you. And of course, a lot of it around Bitcoin ETFs. But, last time we spoke, we were in the midst of the bull market. Now we are in a pretty tough bear market, right? But we know the technology, the assets, Bitcoin, it's here to stay. I want to get your take on the bear market, given that there's macroeconomic factors like record-breaking inflation and just all kinds of things happening in the world right now. How long do you feel this bear market's going to last, and is it going to get worse?
Yeah, so again, this is none of it is financial advice. I have to say this, and these are my personal views. I think I just literally tweeted this. So I said I've never been more bullish on Bitcoin, and so the reason is exactly what you said, Tony. Is because there's geopolitical instability, there's crazy inflation. People are trying to figure out how to just get by. Governments don't know what to do. Central banks are ineffective. Commodity markets have gone crazy. We have seen, I think this month we have seen like five to seven double-digit moves in like the oil and gas market. That's kind of crazy. So markets are at a turmoil. Inflation is high. Bond market's not looking so good. So Bitcoin was literally designed for this environment. So I expect it to do well if things get worse. Now, if people are just selling everything, then there might be a little bit more downside. But overall, I think my sort of like base case is we're going to see a new all-time high in the next 2-3 years. That's what usually Bitcoin does that, and in its 3-year cycle, I don't expect it to be other than a new all-time high in the next 2-3 years. And my sort of base case for Bitcoin is in the next 5 years, again, if it really picks up, then we'll see it taking potentially like maybe 30% of gold's market cap, which would be around $3-4 trillion. So that's maybe a 10 handle from here. That's just my how I think about it personally. There's no good reason why Bitcoin could not take gold's market capitalization, which sits around $10-11 trillion. And so long term, I think Bitcoin is the asset to own. The recent volatilities, along with kind of the markets, and we can get to that later, but some of the mess that has been created by the lending markets and some of the defaults.
For sure. And to your point, you zoom out on the macro, and we're just in another bear market. We had a big run up from 2020 after the March 2020 crash. We had a big run up till the end of last year. And on the macro charts, it's the 4-year cycles playing out. Now, like you said, there's just a lot of stuff happening in the world, a lot of catalysts, including in the crypto market with bankruptcies, collapses, liquidations. We got Terra, we got Celsius, all these things. what are your thoughts on these companies that are having these issues? And is this just a flush out? And, we're seeing some of the bigger players buy up some of these folks, or, help them out in certain ways. And it's just the stronger companies are going to take over these smaller, weaker ones, if you want to call it that.
Yeah, I mean, as you mentioned, sort of like from the 2017 cycle, I think because a lot of new leverage has been added to the space through different lending counterparties and DeFi type of operations that just, again, increased leverage. So price got ahead of itself. So we've just kind of corrected back and flushing out bad operations. We've seen this like in oil and the gas markets. We've seen this in the tech space. Sort of ineffective and highly leveraged players get flushed out, and then the space grows more steadily. So that's sort of what I expect. We'll see much less leverage moving forward, and operations that survive, the grand deleveraging will be much better capitalized. They'll be more careful, and my guess is they'll have half as much leverage as the players that were in the market used to. So my guess for those that the players that got liquidated and are going through bankruptcies, they will be bought out, and they will be bought out by established entities. So like the restructuring for Celsius is sort of headed by Citi. So you could kind of expect the kind of players that Citi is going to bring to the table to do that operation. There's some Goldman is involved in the space as well. So it's like, it's going to be mature cash-rich businesses buying these extremely lucrative crypto businesses that just had maybe a little bit too much leverage or immature policies or not as good of controls as businesses do have. But I think they're going to be bought out, and they're going to be better businesses than before. Maybe rebranded, definitely new management. And some players will disappear as the nature of these markets dictate. But overall, I think it's good that leverage got flushed out.
For sure. Yeah, I think it's just like a cleansing happening, right? And like you said, these established, stronger companies going to come in, and things are going to be operating at a higher threshold, if you want to call it that, for future bull markets. On that note, with Terra Luna's stablecoin collapse, there's been a lot of talk about stablecoins. And of course, Tether always has a target on its back for whatever reason. Maybe it's FUD going back to its legacy FUD, right? Going back to years. But yet Tether continues to show that their books are in order. And even though people are trying to make things stick, it's not happening. Nevertheless, the United States is going to be, looks like they want to pass stablecoin regulations. What are your thoughts on Tether and all the FUD around it?
Yeah, definitely. So first, like I would, it's a big setback that we called USD and the whole sort of like Terra Luna debacle stablecoin. It was everything but a stablecoin. So I would just strongly differentiate between these algorithmic, highly leveraged tokens that mask themselves as stablecoins versus asset-backed coins that are backed by, short-term treasury assets and short-term fixed income instruments. Totally different world. And then I think like probably 70% of the world is being misled by the whole algorithmic crew that those are stablecoins. They are not, and they are separate categories. So that's what I would start with. And regarding Tether, I think it was fantastic to see how it weathered this environment. During the deleveraging, I think more than probably around 17 to 18 billion dollars have been withdrawn from Tether, and they paid out. Like it works. So I think that's fantastic, and I think the FUD is unsustainable around this space. They have made basically more. They have executed more redemptions than banks. They stayed solvent during this period. They keep publishing their transparency reports, which is great. And so I usually say that if the lenders in the space had half as much transparency than stablecoins like Tether, then we would not be in this situation. So I'm actually incredibly impressed by Tether and how well they do in this market, and just excited to see what they're going to do. Like they launched MXMT, which is a Mexican peso tied Tether tokens. So some of these developing economies start launching their own coins, and I think that's interesting.
And do you think that well, I'm assuming, like USDC and Circle plus Tether, all these stable coins will have to in some way report to the governments given US regulations that may be coming. It seems like, okay, you got to show your books every month or something like that, or a direct report feed to, I don't know, SEC or somebody, or the Treasury, right? I just don't know, but you think something like that's coming?
Yeah, so I think like one thing to note is Tether and some of these stable coins already report to their regulatory authorities, including the Financial Crime Enforcement Network, which is FinCEN, and the respective regulatory bodies in their kind of countries where they operate. So it's already in place in some ways. But whether more regulation is coming is TBD. I think there's going to be some level of like treasury level regulation in the US, but Tether, for instance, does not operate in the United States because the regulation is so unpredictable. It's a different story. We could probably talk about that for hours, but it's one of the big issues here in the US that the regulatory environment is so just not reliable. So the likes of Tether just don't operate really in the United States, but at least not meaningfully. So I think what we're going to see is like more transparency in the reserves. We're going to see sort of stablecoin companies going into U.S. Treasuries only. So I'm guessing the commercial papers will be phased out over time. I'm guessing that the duration of the bonds will come down to closer to 3 months from maybe 6 months. It already some of the stablecoin balance sheets, in my opinion, actually look better than bank balance sheets already because it's like there's less bad loans on their books. It's mostly short-term treasuries. So I think the trend is going to be more treasuries, shorter-term treasuries, and as you said, more reporting and transparency. What it will look like, I don't know. It's the regulators need to figure this out. I think one underappreciated place where it's being figured out is through the Bank of International Settlements. They are sort of trying to figure out like what is the right crypto exposure in portfolios and what kind of tier one capital you have to hold against your reserves. So those guys are figuring that out, and I think some recommendations have just been put out for comments, which will be public, I think, shortly.
Sure. And we saw earlier in the year, President Biden, he released his crypto executive order where he's having all these agencies put together a report on their recommendations on how to regulate crypto and so forth. And I think we may start seeing that, sometime this year. I think he gave them a 6-month window or something like that. What are your thoughts on overall U.S. crypto regulations? It seems like we're moving in the right direction, but it's always seems like it's so slow, right? Governments just move so slow.
Yeah, I don't know. I've been following this topic for like almost 10 years now. And yeah, governments are just slow. Maybe it's better that they are slow because the market can figure it out and kind of put forward proposals, structures that work and iterate through cycles. I think the most interesting thing to me is like, who's going to regulate crypto in the US? Like, it's funny that we haven't figured that out in the past 10 years, but CFTC definitely regulates Bitcoin, which is a commodity, and even the SEC chair would say it's a commodity. Finally, one thing we know what it is, but the question for the other tokens is out there, and then I think the SEC and the CFTC will bet a lot where they have jurisdictions, and someday I think again I'm impartial on this on who gets what type of jurisdiction. Securities regulators should get security jurisdiction. Commodities regulators should get commodity jurisdictions. I think the SEC is trying to grab a larger territory because they're interested in the topic. However, the CFTC has operational history and they already regulate a lot of coins and stuff like commodity pools. So it will be interesting what they do kind of with each other and who wins turf where. my guess is like many tokens will remain to be under CFTC's jurisdiction. And, at least like it is my opinion. I think that's good for the space. Securities regulations in the United States are extremely onerous and expensive. So unless there are safe harbors and lighter forms of regulation, they will completely stifle innovation. So that's kind of, that's the balance that you want to find. Like, how do you keep innovating while, keeping your securities laws? So I don't know, like how that's going to work out. Sorry, just one more thing. Like outside of the United States, there are usually not these, there's not a CFTC and the SEC. Like usually there's one regulatory authority and the commodities are not really separated out. So it's a unique situation. And I'm curious, maybe they will co-regulate something, which would be interesting to see.
Yeah, and that's, I know a lot of people have these discussions. Is it a new regulatory body, or like you said, like co-regulate? And where's the lines drawn, right? It's such a mess, I guess, if you want to call it that. And I guess Congress is going to have to figure that out. But certainly people are frustrated with the SEC, and we're seeing they're handing out fines, to BlockFi and so forth. And folks are even more upset about the lack of a Bitcoin spot ETF approval. And we saw Grayscale, they got their application denied, and now they're taking legal action. They're going to sue the SEC. What are your thoughts on there? And are you guys at VanEck planning to do something similar?
The first thought is like, there's no reason why not, no good enough reasons why not to approve a US spot Bitcoin ETF. That's been my constant, ongoing, and unchanged opinion. So that would be point one. Point two, for me and for a few people who are kind of closely following the Bitcoin ETF path and working closely with regulators and Bitcoin and ETF related regulations, it's obvious that this ETF is not going to be approved. I said that publicly too. It's because there are some areas to still kind of address. That includes the jurisdictional issues that I mentioned before regarding the SEC and CFTC. That includes surveillance sharing agreements on the spot trading platforms and how they're being reported. So sort of unsolved problem. And third problem to solve is sort of like what is the capital requirements against a risk asset like Bitcoin or cryptocurrencies in general on bank balance sheets and asset manager and larger institutional investor balance sheets. Those are unsolved problems that the US regulators really care about. Turns out international regulators don't care about it as much as US regulators, but for US regulators, that's unsolved. And I do think that it's unfair from the SEC to not approve a Bitcoin ETF. I don't think it's a good approach to sue them. I don't think it's helpful. I don't think it's really fair, although I'm not a judge, so who am I to say if it's fair or not? But I think the better approach is to, what we have been doing is quietly work through the details, get the information that's necessary for spot trading platforms and how they, might already be complying with surveillance requirements, get spot platforms kind of in a better shape generally. And then I've been working with, and a lot of my friends from sort of like the Bank of International Settlements and sort of like Basel Banking Committee are constantly talking about the capital requirements topic. So, we've kept informing them on what those numbers might be. And they actually put out sort of a recommendation on, I don't know if you've seen the story, but like 1%. So the Bank of International Settlements recommends about a 1% allocation to Bitcoin, and they have capital requirements recommendation for that range, which is came out as sort of people are like, whoa, they are limiting Bitcoin. But then what banks were really happy about this because they were like, well, we can hold up to 1% of Bitcoin on our balance sheet. And turns out that if you look at gold, for instance, there's about 0.5% of Actually, sorry, 0.7% of all managed portfolios hold about 0.5% of their gold in a portfolio, and that's an $11 trillion asset. So basically, this sort of legitimized Bitcoin as gold from a holding perspective for banks. So my point is, like, there are complex issues like this, and it takes a multi-year approach to solve that. And I think issuers and generally larger entities and influential players are better off just working out these issues and educating people than suing the SEC. I think that's like that's a more collaborative approach. But again, I don't know. I also like I'm in the space for I'm outraged also by all these disapprovals and delays, but like going at each other might also not be the most productive solution. So
Sure.
that's just my view.
Oh yeah, yeah, and I could certainly see that. You know, if you're going up against regulators, right, they're not going to forget, and they're seeing it. And while it may be challenging and frustrating, you don't want to necessarily be on their enemies list, right? But you
And
know,
not only, oh, sorry, and not only that, it's not just the enemies list. It's like it's actually just not productive. Like you actually want to work through problems. Like I hear that this is your problem. Help me solve it. I'll help you solve it. And yeah, so it's not. It's just kind of trying to work together on some issues. And I think like that kind of thing takes time. And for like active ETFs, which is sort of like not index tracking ETFs, like it took more than 10 years to get approved. Like there are areas in financial instruments that take multiple years to get approved because it's just a complex issue. And when you have a $20 trillion market that you're protecting, you just want to be careful. And so I understand that also. And yeah, so it's more like, understand the macro, really try to solve problems. And I think that's more productive. But again, I understand the other side as well, which is people are just like fed up with the constant, like, oh, hey, like we're disproving this while we are approving freight shipping and inverse leverage futures, marijuana ETFs, and like stuff like that. It's unfair. So,
right.
yeah.
Well, and I think part of that too, and I don't want to sound like some sort of conspiracy theorist, but rather you see actions and there's a theme behind these actions, it seems like, and that is maybe Gary Gensler as chair is protecting incumbents a bit or slowing things down a bit, right? I don't know, there's obviously I haven't spoken to the man or anything like that, but folks are getting that type of vibe and they approve a short ETF and they approve the futures, but not a spot. And, I spoke to former SEC Commissioner Joseph Grunfest, who he was under Ronald Reagan administration. And in my interview with him, he said these applicants can absolutely sue the SEC over denials because there's no reason that they shouldn't approve it, given they approved the futures and so forth. And once again, we recently saw the shorts futures get approved as well. So there's some sort of theme here, but once again, I don't want to sound like some sort of conspiracy theorist or a tinfoil hat or anything like that.
Yeah, I mean the theme is just regulators are being slow, and to me, like the more interesting thing is like why is this being held up by regulators where so much of sort of crypto and particularly Bitcoin and stablecoins are getting attention and support from Congress. So and so we've been Senator Lummis and Senator Gillibrand have co-sponsored a bill that includes supporting a Bitcoin ETF, and there's specific efforts to get approvals. And so it's people want an ETF, Congress and senators are supporting. And so the interesting thing is why regulators are caught up, and sort of it feels like regulators are caught in between as well. We're serving people want this ETF. We're actually report our boss is the Congress Financial Services Committee. They are pushing us to do something. So it is a little bit peculiar of why things are being held up in this and on the organization level. But it's not surprising. I think there is generally a trend in today's America that the sort of like the three-letter agencies are holding up stuff longer than they used to, and they have increased power. And so curious of what the judicial branch will do about it, and what senators will do about it, because on the grand scheme of things, okay, like if Bitcoin is already available to so many people through crypto exchanges, terrible funds, and like things are just worse, like futures, ETFs, OTC funds that are at a major discount, crypto exchanges, some of them that default. So like ETFs are this very good mechanism that have better procedures than the currently available option. And we are losing ground also to foreign countries. I think like over 20 countries now have Bitcoin ETFs, and probably 100 can access it through those countries. So like that's sort of, at some point we lose our competitiveness internationally. We're also failing to protect people in our country with established structures. So there's just not a good reason. So like regulators are running out of arguments, and I think it will be a blemish on their resume over time, and might hamper them from getting more serious positions later. Sure. So.
I wanted to ask you about how your company, VanEck, ETFs overseas in Europe and so forth are doing. And have you guys, and I apologize if I miss this, have you guys launched a spot ETF there, or in other ETFs as well?
Yeah, so thanks for asking, Tony. We do have a business and sort of like a digital asset focused business in Europe, and the structures there are ETPs. So kind of like the 1933 Act Bitcoin Trust, which is technically an ETP in the US too, what most people are applying for. So we did launch a Bitcoin ETP, and I think 7 others or so in Europe. And I think we also have Tron, Avalanche, a few others, and there's lots kind of in the works. And so they got approved. They're distributed into, I think, 14 or 15 countries, operating very well. Spreads are a few basis points, trading very nicely. So, no issues. Regulators approved there. Banks are buying them. It's just like, it's not much of it's not right now. I'm managing a Bitcoin ETF. It's just not a big deal. And so we have this like few years of operational history there to show. Our index subsidiary also made regulators happy, manages roughly $4+ billion in just crypto assets in the space, like indexed assets over the past 5 years, which is pretty good. Like, so people are comfortable with pricing, custody, ETF trading, and and so I joke around just a few days ago. Even the Swiss Post Office started trading Bitcoin, like they offer Bitcoin trading services. So I joke around that the Swiss Post Office has beat the U.S. capital markets to trading Bitcoin. It's like, that's kind of crazy. So anyways, I think we have some catch-up work to do in the US.
For sure. And recently there was interesting news about the Virginia County Fairfax commits $35 million to VanEck's crypto lending fund. Can you tell us about that fund and how that partnership came about?
Yeah, in general, I cannot discuss specifics, but in general, I can tell you about our kind of rationale. And so we have, basically, we believe that the crypto ecosystem needs cash. And so the VanEck fund is sort of lends into the crypto ecosystem through various larger counterparties. Not any of them that had trouble lately, I can say that. And so what we do is try to create a sort of like a low risk approach to lending out cash to crypto companies and kind of earn interest on that fund. It's a private fund for accredited investors who need higher accreditation to get to that, and we were very excited that pension funds and sort of like nation states are considering working with a reputable counterparty like VanEck and to do some stuff safely. We can't have our $85 billion business go down, so we're making sure that we work with the right counterparties and do this in a low risk way. And so it's interesting. To me, the most interesting part about this is how pensions are open to investing in a Bitcoin strategy or a crypto-based lending strategy, and it opens up when pensions start investing in the space. I think it just opens up sort of like a generational trend. Like you and I will retire hopefully someday, and the fact that like we're not policemen or firemen or teachers, but like, so if our pensions and our selections and our sort of like retirement portfolios make these funds available, then we get the chance to capture just a generational trend. So like we just put a very small portion of digital assets in our portfolio, and same way as you do it with stocks, and then we don't really have to watch it. Maybe in the next 50 years it will play out, and if we get lucky, then we sort of like capture a crazy trend, like some of the technology stocks or industries that have done well. And if not, then we have a diversified approach and whatever. But so I think that's really interesting to me, because it is like pensions adopting just shows to me that we are setting up for sort of like a multi-generational trend for digital asset adoption. And that's why I think like where we are around, like, let's just say $1 trillion in the crypto space, still so small compared to global assets. And I think pensions are realizing this.
Yeah, and just imagine if we had a Bitcoin spot ETF approved, I'm sure that we would probably get more pensions and endowments and all these folks investing and feeling more confident to do so, right? I'm assuming an ETF would just green light a lot of different funds, companies, retirement accounts, and things like that to be able to access Bitcoin.
Yeah, you're right again, Tony. So hopefully that happens. And again, the idea is that ETFs are battle tested over the past 25 years. And, there's insurance in the space, there's good pricing, there's bankruptcy mechanisms that are sensible and all kinds of protections. So I think it would be so easy to approve one. Like I wish I was the chairman of the SEC. That would be the easiest decision of my career, just to approve an ETF, because it just is the best tool, like to actually perform what they are set out in their mission.
For sure. A couple more questions and I'll let you go. Are you guys at VanEck planning to do anything with NFTs, maybe any type of funds or ETF or whatever it may be?
Yeah, so definitely on the NFT side, we actually just created sort of like there's a VanEck NFT community. You can follow that on Twitter, which is kind of cool. We created a series of NFTs, which is interesting. And I think something like 50,000 people signed up in like the first week, which is crazy. So we have a small team that works on NFT and metaverse type of stuff. It's pretty, like, it's exciting. I think a lot of NFTs are art. For part, I love art. Like when I don't spend all of my money on art, but I like art. A lot of NFTs are scams. Yeah. I also don't spend my money on scams. But there's also like this whole idea of collectibles unlocking a lot of different things, like ticketing, access to things, revenue share. So I think that has potential. And what this is just basically transformational technology linked to economic incentives, which can be powerful. So we have a more crypto native approach to it. Not necessarily funds, but we're working with several projects. We create art, we give away NFTs, we kind of have a community chat and Twitter Spaces and stuff like that. So I think it's interesting, and I think it has a future, because like what you want to do is, I think a lot of fund management is boring, right? Like you're just kind of dealing, and well, not boring for me because I get to deal with other governments and big banks and all that, but you can't really directly talk to people who own some of your assets, and this way we can more directly connect, and it's kind of fun to do that.
For sure. Wrap up question here for you. If you could create your own metaverse, what would the theme be?
This whole I spent my past 3 years in creating my own metaverse with PointsVille. So I think
right.
that would be my own metaverse. So we have basically I think augmented reality. I don't like the metaverse word. I think it's weird, misleading. It's sort of playing in the universe and miniverse and all kinds of weird verses. But I think augmented reality and engagement with AR stuff is going to be big. So with PointsVille, we actually have 80 plus corporate partners now, like 400K users and 110 plus brands that, like CVS, Nike, and other big ones that are on our platform, giving away rewards. So you walk around, pick up stuff in your area. And so I think like economic incentives and rewards in AR is going to be big. And a lot of people, like so far, only like big hotels and airlines and big brands could create their own rewards. But I think everyday people like you and me will be able to create rewards and sort of like loyalty tokens and give it to people to build our communities. Like, well, let's just say your listeners. Like if I spend, I don't know, every week a few hours listening to a YouTube channel, what if they got a token for it? Like those are the kind of things that we can do. And I think the innovation in this next kind of metaverse space is going to be first, like what the creators first didn't get paid. Creators are now kind of getting paid, unfortunately, through platforms, because platforms keep a lot of money, right? Like YouTube and all these big players. And so I think so creators are going to get paid a little bit more through tokens. That will be my kind of bet with the metaverse idea. Plus users are going to get paid. So that in my metaverse, users get paid. And that's sort of what I'm betting on. And loyalty token wallets and AR has a role in it. Yeah, it's not like, and I don't think like it will be one tokens, but it will be more of an open architecture where there's going to be thousands of tokens and people will find ways to exchange it with each other. So what I see in this space is, interestingly, is like people creating wall gardens again and again, like use my token as opposed to having a Tony token,
Yeah.
Why use the third-party token when you can like do your own sort of thing? And I think that will drive, like the creating your own token will drive the next sort of phase of the metaverse.
Yeah, totally agree with you. Like the word metaverse, it's like a lot of the stuff is already here with AR and VR and so forth. It's just how it's put together and packaged and it gets branded as metaverse. And I absolutely agree with you on the token economy and certainly, we'll talk offline and stuff about, more of that. But Gabor, always a pleasure, my friend. Thank you for joining me today.
Thanks for hosting. Really fun to hang out and